Hello, hello, hello. I'm Tamara and the Tax Doula with today's tax tip. Today's tax tip is about the Internal Revenue Service's list for 2025 called the Dirty Dozen. This is a list that the IRS sends out every year, warning taxpayers, tax professionals, and businesses about common scams that they should be on the lookout for. I'm not going to go over every scam that's listed here, but I will highlight a few. One of the scams that they tell us to look out for are the email phishing scams. Now, I'm sure we're all familiar with these. It's when you get either an email or even sometimes a text message from an institution like a bank, a utility company, or in this case, the IRS telling you that you either owe money and you need to pay it right now, and they're threatening you with legal action that's going to occur if you don't hit this button on the screen right now or if you don't respond to a text message. It can also be a phishing scam where maybe they're asking you for more information, like an account number, or in the case of tax professionals, they might say, "We have important information about your client and you need to respond right now." In these instances, it's important for you to remember that the IRS does not send emails to people. If you owe them money, they're going to send you a letter in the mail, or you're going to be able to go online and if you have an account with them and find the information that you need. So if you receive anything and it says it's from the IRS, the best thing that you can do is send it to the trash or send it to your junk mail or spam or whatever, but just delete it. Don't click on anything, don't open it. And if you have any questions or concerns, you can call the IRS directly and speak to an official. But do not click on any of the links that you'll find in these emails. They also have the ability sometimes where if you do click on something, it initiates malware, which is something that attaches to your computer system or does something to your phone. So it's just very important um, that in these cases that you don't allow yourself to be curious and you just delete them and keep moving. Another area that the IRS wants us to be aware of are fake charities. Now, unfortunately, in this society, we do have people who pretend to be charitable institutions, and they may be reaching out to you asking for a donation of either money or goods. And these are scams, and they're not real institutions, they're not real charities. So it's always important for you to do your homework. It's always important for you to look up and see if this organization is legitimate. And remember that the only charitable donations that count are those that are qualified tax exempt organizations recognized by the IRS. And you can contact the IRS, you can go online, and there are different websites where you can find this information and look up and see, is this a legitimate organization? Is it a legitimate charitable organization? Because something could be a legitimate organization, but not a legitimate charity, meaning that your donation is not tax deductible. So it's extremely important that you look it up in order to find out if it's a legitimate tax exempt organization that is recognized by the IRS. Another scam that the IRS is letting people know about, and in some cases, I've come across this as well, this particular one, and I have gotten this information for people who mean well, but when I've looked it up, I found um, that not everyone qualifies and that the information that is going around is not completely accurate. And the IRS refers to it as a bogus self-employment tax credit. On social media, what you will frequently hear people saying, particularly when they are trying to recruit individuals to work with them around tax preparation, is there are these promises that are sometimes made that they can get you thousands and tens of thousands of dollars in refunds. And that can be very misleading because you never know. And I'm saying this as a tax professional, you never know. You cannot promise anyone that you will get them tens of thousands of dollars back or, whatever the number. You can't make those kind of claims. The only way you know what a person will get back is when you actually start to complete their tax return and gather their information. So this self-employment tax credit, and I'm going to tell you what I've heard about it from my perspective. I've heard people say if you were self-employed during the COVID-19 pandemic, you're entitled to payments up to $32,000. And it's really not that simple. There are other factors that go into it to determine if you actually qualify for this money. And it has more to do with if there was an interruption in your business because you were sick or you were taking care of a child or a family member who was sick and it interrupted your business. So there's a lot more details that go with this, but there are a lot of places where I have seen as well that there's this promotion that just because you were self-employed during that period of time, that you're entitled to receiving this credit. And it's not actually called the self-employment tax credit. It's actually called the credits for sick leave and family leave. So it's related to having to take sick leave or family leave during the pandemic. So if someone is telling you, if you have a business and someone is telling you you need to apply for this money simply because you had a business during the pandemic, it's extremely important for you to contact a qualified tax preparer because you may or may not qualify. It's just really not that simple. And the last area that I want to cover, and there are many more here, and maybe I'll cover some of the others at another time. But this one is overstating your withholding. What can I tell you? There's scam artists all over the place, and sometimes people are encouraged to exaggerate the number of dependents they have. Maybe, they're in a relationship and their partner has children and they're claiming children that don't belong to them, or they're overstating the amount of withholding that they had on their W-2 forms, and maybe they're working with people and they're falsifying records, saying, doctoring their W-2 forms and saying that they had more money taken out. That's what a withholding is. They had more money taken out, whether it's for Social Security or Medicare or income taxes, and they're overstating the amount of money that was taken out of their W-2 forms, or even on a 1099 form. Information is placed there that is falsified in order for these people to get a large tax refund. And it's important that you not exaggerate, you not overstate, because one thing I can tell you for sure, the IRS sends out a regular newsletter. It comes out, I think it's like on a weekly basis, but it comes out quite frequently. And one of the things they always have in this newsletter is who was recently convicted or charged or fined, who is a tax professional who cheated the government, as they say. They cheated the government out of X number of dollars because they prepared over the years. Maybe, like, for example, they might say there was a tax preparer and they named them and they say over the course of 5 years, this individual misrepresented and filed 100 tax returns that were falsified, and they made the government lose like $1 million in tax returns. So the government is not playing. It doesn't matter if you are in agreement or not with whether taxes should be something that we pay or we not pay. The way to dispute that is not by falsifying your records, because they will come for you. Okay. So that's it for today. Those are the tax tips for today that I have for you. I might take a look at this Dirty Dozen list and see if there are a few other things that you could benefit from. But that's it for today. And until next time, I'm Tamara Wren, the Tax Doula.